we're going to be answering the question, why is crypto falling today? The question that seems to be on everyone's mind. We're going to look at the typical culprits when we do see crashes like this, and we're going to see if they have any insight for us. So thanks for joining. Don't forget those likes and subscribes. I'll be vibes. So why is crypto crashing? Well, let's start with this. This is an interesting thought. Has crypto really crashed? It's weird. If you guys open up your news, if you open up your streams of data, every article is top double analysts that predicted every lotto winning ticket number in the world says Bitcoin's going to 5K, Bitcoin's going to 10K, etc. I want to make you guys mindful of this while I think about it. Do you find it a little sus? Do you find it sus? I do. The reason being is Bitcoin, and we're looking at the total crypto market cap, one of our favorite charts. While it doesn't look good, we aren't any worse off than we were in June or July. Yes, we have a lower low in the month, but we had already broken the previous month's low. Let's open up the Bitcoin chart. Let's put it on the monthly. This is where we got to keep based. With 11 days and one Sherpow meeting left on the 21st, make sure you tune into that. The stream is scheduled. Go set a reminder. There's a little button they let you set a reminder on YouTube. Don't miss that. Those are our best streams. We are, with 11 days and one Sherpow meeting left, we are waiting to see September's close. This is the last month in Q3. In 11 days, 6 hours, we will have our final quarter to what is, in my opinion, probably the single most painful crypto year we've ever seen. And I think I have the charts to back that up. If we look at BLX, which we're not going to do because I'll get sidetracked here, you'll see that this is, in fact, the worst yearly candle we've ever seen. And I don't know why I did air quotes, because it is. This is the first time ever in the history of Bitcoin do we have a bearish engulfed yearly candle. And we talked about this long ago. We talked about it since. In fact, when we first started pointing this out, people said, Tom, it's like, we're only like 4 months into the year. Like, you can't say that yet. And I agree. It isn't a closed bearish engulfed candle, but that doesn't defeat my point. As, well, one, it's still bearish engulfed. Not great. That would give us a target of, it's around 29,000 to close above in the next 3 months and 11 days. It is possible. I'm still actually leaning in that direction. Until I see June's low, I'm still leaning in that direction. But even if it doesn't close on a bearish engulfed yearly, Bitcoin has never bearish engulfed even intra-year. This is Coinbase's history, so this candle actually doesn't show all the data. 2014 opened much lower. So that in itself is significant. But why is it dumping today? I don't know. We're going to find out together. Our target being onto the main topic of the story. Why is it crashing? Let's take a look at the main culprits. As I said, the dollar not really giving us any insight. The dollar not having a volatile day. In fact, extremely low volatility on the dollar. If we look really closely, let's just put two horizontals, we can see that the dollar is trading very much in a horizontal channel. Now, in my opinion, the probability of that breaking to the upside is lightly weighted to the upside in a horizontal channel, but it seems to be respecting 109.6 and 110 as resistance above. So the dollar isn't the reason. It's interesting because if you look at this chart and you invert it, it looks damn well just like Bitcoin. Like, it looks really close to the Bitcoin chart. It's like a year of falling. The difference is the dollar did break to a new low, or in this case, a new high, when Bitcoin did not in September. That could suggest that Bitcoin and the dollar could be decoupling a little bit. The dollar is showing continued strength, while Bitcoin is not showing that corresponding weakness. That is actually pretty spicy, and I'm surprised we didn't see that earlier. We do have bearish divergence on, say, our daily or weekly time frames, but I'm still waiting for the monthly close to see if we're going to see that appear on the monthly. While it doesn't guarantee the dollar can't go up more, bearish divergence on the daily and weekly time frames is pretty much what I personally ignored on Bitcoin on the way up, because I said Bitcoin doesn't care about bearish divergence on the daily, especially in a bull market, and now it seems the dollar is in the same position. So interestingly, the dollar is not giving us an explanation here. And it has. If you go back and look, it has very, very closely and accurately done this over the last few months even. So if it's not the dollar, what could it be? Well, I'm not sure I have the answer, but we're going to do a little more speculating. On our last stream on Friday, we saw something happen that actually gave me a little bit of fear. I don't experience fear in markets often. I have been in crypto for many years. I used to experience it every day and eventually become numb. But this chart gave me chills. On Friday, the gold fell below a 2-year support, reaching to a new low. This is not good. Not good. I would really like to see gold randomly bounce up here. That would likely coincide with the dollar falling. But we don't have it yet, so let's zoom in. Gold reaching to a multi-year low down to 1654. Let's see on Friday. Was it Friday? 16th. A little bit of a green candle, 0.5% up. Today hasn't broken yesterday's low, but it is gaining a little strength, at least comparatively to Friday's close. Not convinced. Not convinced on this bounce here. Maybe just a retracement back to like close to the 1700 level. Weirdly kind of mimicking Ethereum on price point, but I digress. This also doesn't necessarily explain Bitcoin or crypto's fall today. It does mirror it. If we are going to make the case of store of value or inflation hedge, people have long criticized Bitcoin when inflation has gotten hot and Bitcoin hasn't gone up right away. Well, explain this then. Why is gold hitting multi-year lows when inflation is super hot? When we're looking for 75 or 100% BPS hike again in this month on the 21st. Something doesn't add up. Something doesn't add up here. Where is the value going? There really is only one chart I can show you, and yes, you guys are probably gonna... And bonds. Bonds clearly in an uptrend. We've seen the 2-year and 10-year inversion, which is a typical foreshadowing for a recession. This is where the money's going? Question mark. This doesn't... markets do not always act rationally. Today is honestly, and you guys have seen me go live many days, and we have some great explanations and some great things to point at and look at. We don't have that today. I do not know where money is going. Is it going into bonds? So are we really saying that people are taking 3.5% in 10 years? People are accepting a 0.35 per year return on their dollars? Something doesn't add up. Where's the money going? Where's the value going? That's my question, and I don't have the answer. At the moment, we are seeing kind of unprecedented economic times. The things that should be acting as inflation hedges are not thriving in a heavily inflammatory environment. The dollar seemingly being the strongest asset during hot inflation times. Where does capital go? And this is a question that I've asked many investors and many traders, and no one has the answer for me. There is no answer. No one knows what to do. Do you put your money in dollars, meaning you sell your assets, knowing you're going to take a guaranteed 8, 9, 10% hit on inflation? And let's be real, inflation is much higher than that. That's just core or CPI, whatever gibberish metric they use to make things seem okay. Do you put your money into that because it's going up, knowing that you're losing? It doesn't make sense to me. If we take a look at stocks, we'll see that they have, sure, a green day today, 0.25%. I'm not really going to say that this looks good. This looks pretty terrible. 4,300 rejected as resistance and created potentially 0.25% gain on S&P 500 today. Not really the best look. Maybe even just filling this tiny gap here on the daily. Stocks are down. Gold is down. The dollar is up. Inflation is up. And bonds are inverted yet also up. This is a very strange time. I certainly have never lived through something that resembled this in any way. This is odd. Maybe, and I'm just, this is a little bit of tinfoil hat, maybe just off the cuff here. Maybe the world has operated on imaginary money for too long, and now it's time to pay the piper. Everybody lent everyone money that didn't exist, and so now maybe everyone is losing that imaginary money that doesn't exist. I don't know. Love to hear your thoughts. The logical thing to me would be to like put money into the dollar, which isn't really an investment. It's a guaranteed loss. If everything is going to go down, yes, the smarter choice is to put your money where it's going to go down the least, right? I just don't like that guaranteed year-over-year loss. Even if the Fed gets inflation under control, it's not. I mean, stagflation is a possibility, but not a realistic long-term possibility. You see, like some stagflation maybe for a year, but that isn't going to make the dollar a good investment. It's not going to make the dollar a long-term investment. One thing we actually didn't look at here that we absolutely should be the euro. This is a big factor. The euro not giving us much either. Just tangoing with parity 1-to-1. The euro was trading at about $1.20 just a year ago, now down to parity, dipped under parity with the dollar at 1-to-1. I mean, maybe if we saw a push happening on euro, that would explain, okay, value is going to the euro because the euro became undervalued. We're not seeing that. It's fallen to parity and it's chilling. It seems kind of comfortable there, right? It's weird. The euro represents more than 50% of this calculation. Remember, Dixie is a basket of, the dollar weighted against a basket of other currencies, the euro being the heaviest weighted. And so it's reflecting that, not necessarily the dollar's purchasing power. That's where this gets complicated. That's where this gets really complicated. Inflation intrinsically means that dollars have less purchasing power. Yet Dixie is going up. So what does that mean? It means that the dollar is simply inflating slower than the pairs it is traded with that are measured in that basket. So it seems like a loser's game all around. It's a little weird. It seems that the root are more comfortable with, and so the 2-year is actually a much better deal than the 10-year, which is the inversion, is the yield curve inversion, which doesn't make sense and typically leads to problems in the economy. You can put your money down for 2 years and receive almost 4% today. Or you can put your money down for 10 years and receive 3.5%. There is no incentive right now to get the 10-year. The 2-year trading, actually, it looks kind of parabolically higher than the 10-year. This can easily be shown.